Let's talk now to Joshua Mahony, who's a Chief Market Analyst at Scope Markets. Welcome back to the programme, Joshua. Good to see you. So let's talk about Hermès then. Their results telling a very different story from most of the rest of the luxury market. What is that company doing differently?
Yeah, exactly. Roughly 11% growth in terms of sales for the quarter. That is down from 13% previously, but nonetheless, outperformance in terms of expectations and the kind of growth that we're not necessarily seeing from some of its competitors. Look, we're talking about a company that is very difficult to get your hands on some of the most exclusive goods that they have, and also they're perceived as somewhat of the most expensive of the lot when you're looking at some of their rivals. We're talking about a company that's selling handbags at 20,000, 100,000, 200,000 per bag. That's not necessarily something that all of the brands within the industry are doing, and so the question mark here is whether the different subsections within the luxury market are performing differently, and certainly that appears to be the case when you have something that is so scarce that you have to go on a waiting list or potentially buy a series of other products to be able to get that, say, Kering bag. That puts you in a position that when you actually finally come forward to be able to buy it, you make that purchase and you see it as an investment decision. So that's something that has stood them in good stead. And hopefully that will see them through a period that certainly has been difficult for the sector. We're seeing from some of the other names that they're expecting it to be a relatively tough fourth quarter as well. But there's an expectation that 2025 will hopefully be better for the industry as a whole.
So when it comes to Hermès and their Birkin bags in particular, we're talking about another level of exclusivity, really, aren't we? It's part of why the company is doing well is because those ultra-rich shoppers who might be buying those products are just not affected by the kind of headwinds.
Exactly. I mean, you know, someone that studied economics will know this is all about price elasticity of demand. How reactive are you as a customer to a change in prices or to a change in your underlying wealth? And certainly that has come into question, most notably in China. Of course, much of the wealth in China has been created off the back of the real estate market. Well, that real estate market hasn't held up that well recently, and with the declines in prices for real estate in China, so went a lot of the demand for some of these luxury goods. And certainly when you're looking at Hermès, there is a perception that potentially some of their goods are more of an investment piece as much a fashion item. That's not necessarily the case for all of their competitors. And so they've stood up very well. Notably, if you do look at the underlying figures, it has been the likes of Europe and the US that has performed very well. We've also seen strength for many of the brands within the sector over recent quarters in Japan, where people were seeing that weak yen and going over there and buying products in Japan. But certainly there has been continued weakness. There is a bit of weakness still for Hermès in China, but with the fact that we're seeing constant news coming out of China around the possibility of new stimulus measures, fiscal stimulus, monetary stimulus, there is a hope that this is the bottom for China, and that should ultimately feed through into some of these high luxury goods.
So we've had recent results from LVMH and Kering. We mentioned them. They did much less well than Hermès, obviously, both flagging a drop in demand. Should they be doing what Hermès is doing and chasing that very high-end market? What's the outlook for the wider sector?
Yeah, I mean, easier said than done. It's notable that Gucci have had a sort of complete change in direction recently over the last year and a half. They changed the branding and the styling to be a little bit less garish, a little bit more modest, so to speak, and some of that hasn't necessarily really led to increased sales. There's a feeling that might lead them to less volatility in terms of the demand for their products going forward, but certainly it's not necessarily been an easy ride thus far. It's not easy for these companies to suddenly pivot onto the same positioning as Hermès in terms of suddenly selling a bag that's worth 10 times more than what they had previously. So that's not necessarily a strategy everyone can go after. But certainly for investors, there's a view that sometimes you want to buy at the times when things don't look so great. And it doesn't necessarily look that perfect right now. But I wouldn't necessarily say if you look forward that in the years to come, this kind of luxury good is going to constantly be out of fashion once we see the likes of the governments and the central banks really focusing on pro-growth strategies and not driving down inflation, which is what the pivot is happening within the Western world at the moment, then there's a view that we're going to see things taking on a little bit more of a rosy outlook. And certainly, hopefully, China comes with it, with the fact that we're seeing similar kind of approach from the PBOC and the government. And so hopefully 2025 is going to be good for all segments of this industry.
Joshua, thanks very much. Good to talk to you as always. That's Joshua Mahony from Scope Markets.